Anyway, I want to go to Washington, D.C. right now, where we find Adam Shapiro for the Beige book.
And Trish, economic activity across all 12 Federal Reserve districts is expanding at a slight to moderate pace. The majority of districts actually expect a modest to moderate gain in growth of the economy in coming months. But consumer spending, which has been rising across a majority of districts, reports softening in some districts of consumer spending, especially auto sales, which declined in half of the districts. Labor market growth continues to expand at a modest to moderate pace, but it is flat in Atlanta and St. Louis. Big gains in construction and IT services jobs. Several industries report a shortage of qualified workers. Wage growth, this is particularly worrisome to the Fed. Wage growth is modest to moderate in most districts, and a few districts actually note that prices have eased slightly. That adds to the Fed's inflation concerns. Highlights from some of the districts in New York. There's a tight labor market, but the commercial real estate market, especially in New York, softened slightly. In Philadelphia, consumer spending has declined sharply for clothing, cars, and new home construction. In Atlanta, same story, consumer spending softening. Chicago, consumer spending and construction real estate activity increasing. St. Louis, minimal hiring due to a shortage of qualified workers. And here are some quotes that kind of sum all of this up. Boston, one retail contact noted that movement of consumers away from in-store shopping and toward online shopping is accelerating faster than anticipated. In Philadelphia, falling used car prices have been a contributing factor to softer demand for new cars. A couple of highlights: San Francisco, the real estate market, robust. Minneapolis, Kansas City, agriculture. They have some problems there because of drought in the Minneapolis area, and in Kansas City, falling farm prices are a contributing problem for them. Back to you.
All right.